Let's talk about some surprising research just published from Altos Research. Altos Research said that availability or active listings for single-family homes fell again week on week, now at 457,000 available homes. Falling supply into stronger demand is seeing the return of bidding wars. Now, we're not seeing bidding wars over asking, we're just seeing multiple offers at or near asking price, which is a much healthier market. But yes, stronger demand, fewer sellers heading into the spring selling season. I mean, think about that, right? We're heading down in inventory. The spring selling season is right around the corner and there's not a lot for sale. So remember though, there is luxury, move up, and affordable. I still think if you're in the market for luxury, you're going to have plenty to choose from. But if you happen to be a first-time home buyer looking for that home, or maybe a one rental at a time student looking for a rental, it's going to be tough out there. I don't know what to tell you. Not only was inventory down, but pending climbed 6%. So we are seeing stronger demand into less supply, clearly showing in the numbers. And by the Altos Research is calculating that median home price is $415,000. Lastly, Altos Research is now saying that leading indicators for the housing market point to a flat year. Welcome to the party. That's what I've been calling for all year. Let's talk about Jerome Powell. Jerome Powell is going to have a very important speech on Tuesday. This is what I'm looking for. Right, so if you're watching it or you read about it, I will have 4 things that I'm going to look for. 1, is he going to talk about deflation in goods, right? The rollover in CPI, PCE, all of those. Is he going to highlight that goods are disinflation or actually deflating? Will he talk about housing? Will he talk about early indications of rent or rent equivalent? Again, as you've heard me talk about, we have the easy, which is almost over. Now we are entering the hard. And the hard's going to take 4 to 6 months. It'll be interesting to see if Powell talks about that. And then finally, what I call the really hard, which is wages. Wages are pretty interesting. We had a blowout jobs number on Friday, and wages came in a little less than expected, at least wage increases. But again, it is a tight labor market. Participation rate went up slightly. And now we're sitting at a 55-year low for unemployment at 3.4%. Yes, folks, 3.4%. So is he going to talk about wage inflation, which I think is the really hard, and why I don't think we get to 2% inflation, and why I don't think the Fed cuts rates this year because of wages. And then finally, is he going to reiterate higher for longer? This is what I think the stock market is starting to get, the bond market, is that the Fed is serious, right? There is no Fed pivot coming. We'll see what happens. We see meme stocks going up. We see Bed Bath & Beyond up like 30% or something. Can't explain it, but yeah. So again, I want to see if he talks about higher for longer. Since we're talking about Jerome Powell, let's talk about the bond market. Again, I think the bond market is really starting to understand that there will be no cuts. We are getting close to the terminal rate, which will eventually allow mortgage rates to slowly fall as banks compress the margin, which again is historically large. They have room to cut. But until we get to the terminal rate and the Fed officially pauses, I think banks need to be certain that they're not going higher. The bond market is also admitting that the recession that they were calling for in the summer, probably not going to show up. Pretty hard to call a recession when you have 3.4% unemployment. That would be unheard of. And next, what is the terminal rate? Is it another quarter point? Is it 50 basis points? Is it 75? Will we be getting there in quarters? Does he see a big rate bump? All of these things are things I will be looking for in Jerome Powell's speech. Let's talk about Boeing. I don't know if you saw this, but Boeing is announced a 2,000 employee cut. And Boeing said It's 2,000 white-collar jobs, specifically from finance and HR. I've been calling this the white-collar recession, and it looks like Boeing agrees. Pinterest missed top, missed bottom line, and gave very weak guidance. Chegg also missed top line, missed bottom line, and gave weak guidance. And then lastly, just for fun, looks like Binance has suspended US dollar deposits and withdrawals. I don't pretend to know what that means, but in the crypto world, where there's smoke, there's fire, and do we have another exchange going away? I don't know, but I guess we'll find out soon enough. In the end, and then finally, Arizona home prices. I could not believe this from John Wake. Shout out John, who's been on the channel. Arizona home prices, given all the crazy run-up, all the crazy crash talk, down 5% from the peak, and up 1% month on month. Pretty crazy. It's not the waterfall continuing to fall, everybody's cutting prices, get out of town, that the crash channels we're talking about. So if Phoenix, Arizona bottomed already, what does that mean for the rest of the country? Sacramento, same deal. If Sacramento bottomed, what does that mean for the rest of the country? These are serious questions. Reventure Consulting is talking about a 30% housing crash in 2023. Folks, Arizona already bottomed. Sacramento already bottomed. I don't understand. And according to Altos Research, inventory is falling. Demand is higher. I don't understand. Anyways, take care of yourself. Enjoy the view. We are off to another wonderful part of Malaysia. Hopefully this video loads in time. I apologize for the video being late today. It actually took 10 hours. Yes, folks, the video you watched yesterday took 10 hours to load on the ship's Wi-Fi. So hopefully this one loads a little faster. And again, enjoy the view.